Hi and welcome to our today's video. My name is Tim and I'm the founder of Global Investor Network. Today I want to talk a little bit about assets. What assets are, how you differentiate them from liabilities, and what is important in acquiring an asset, holding it, maintaining it, and maybe selling it. So what is an asset? An asset is something that puts money in your pocket, that generates a cash flow. Vis-a-vis a liability that draws money out of your pocket. So when you think about what you have in your life, what you have invested in, what you have in your properties, in your day-to-day life, think about what actually are assets and what are liabilities. And there's one very, very common perception I want to talk about, which is very important because it usually concentrates a large amount of cash, which is your house. Many people think that their house is an asset, which in our definition is not really true. If an asset is something that puts money in your pocket and you have a house where you live in, your house is not an asset because usually you have to pay interest on your mortgage, you have to pay costs for fixing the house, for keeping your maintenance, and for keeping the house in good shape. In contrast, a real asset would be, for example, an apartment which you rent out and where you collect the rent. Because then the apartment is an asset for you. It generates a monthly cash flow, and after deducting maybe the interest and maybe the costs, you still have something in your pocket. And this is the very important differentiation between assets and liabilities. So whenever you spend money on something and you want to generate more money out of it, you want to make a real investment, make sure that it makes money for you. On a monthly basis, on a weekly basis, on a yearly basis, that doesn't matter. But the important thing is that it actually generates a cash flow. Another very important asset are stocks. I'm talking about real stocks, not investment funds, not derivatives, but real stocks of good companies, which bring you a dividend. A dividend is cash flow that is generated from the stock, independent from the stock price. So when you invest in a stock, it doesn't matter if the stock price goes up or down, the stock will pay you a dividend. So the important thing here is that the dividend actually, again, puts money in your pocket, generates interest for you, and makes sure that you even have something beneficial from the stock if the stock price goes down. So you can hold the stock over a long term and still generate money from it, even if the stock price plummets. If it goes up again, then you can sell the stock and have a profit from selling, but that is not the important thing here when making the decision to buy a stock. So to sum it up, whenever you buy something, whenever you make an investment, make sure that the investment is an asset and generates cash flow. If it generates cash flow, you will always have a beneficial effect from being invested and do not have to worry about whether the stock price or the price of the asset actually goes up or down. Thank you so much for listening. I'm happy to have you here on Global Investor Network. If you like this video, please click on like. Please follow our YouTube channel so that we can provide more interesting videos for you. Thank you so much.